In prepared remarks for appearances on Capitol Hill, Fed Chair Jeremy Powell says that the policymakers remain attentive to the risks that inflation poses and do not want to ease up the interest rates too quickly either. So we had good glimpses of what appears to be a rather well-guarded testimony of Jeremy Powell. The committee, he says, does not expect that it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably towards the 2% target. Jeremy Powell noted once again that lowering rates too quickly risks losing the battle against inflation and may likely have to raise rates further at some point of time, while waiting too long poses danger to economic growth. So he understands that there is a risk both ways and they're trying to balance the risks well. Jeremy Powell has reiterated that he expects the interest rates to start coming down later this year, but is not ready to commit as yet when. In prepared remarks for congressionally mandated appearances on Capitol Hill Wednesday and Thursday, Jeremy Powell said that policymakers remain attentive to the risks that inflation poses and do not want to ease up too quickly. And in total, the speech has broken no ground on monetary policy or the Fed's economic outlook. However, the speech indicates that the officials remain concerned about not losing the progress made against inflation and will make decisions based on incoming data rather than a preset course of action. Markets had widely been expecting the Fed to ease up aggressively following the 11 interest rate hikes, totaling 5.25 percentage points or 525 basis points that spanned March 2022 to July 2023. In recent weeks, though, those expectations have changed following multiple cautionary statements from Fed officials. The January meeting helped cement the Fed's cautious approach, and today's testimony of Jeremy Powell is precisely doing the same thing. If there is a further delay in interest rates, which I believe could happen, that is going to rattle world financial markets, which also I think is going to happen. Friends, to get to know when exactly that inflection point is going to take place, please do join our Prime or Prime Plus Telegram groups, which are addressed specifically for the world financial markets and US markets in general. They address the concerns that the markets are going to experience going forward. They tell you the point of time at which all this is going to change, and the Federal Reserve, how long it would take for them to start cutting interest rates, and where the frustrations can lead to markets easing off and falling sharply. To join any of our Telegram groups, please do WhatsApp us on 982-086-1044. Alternatively, you can also email us at globalmoneyinvestor@gmail.com. globalmoneyinvestor@gmail.com. Have a great investing day ahead, and do remember that although in the short run the market has some steam left, I think the day is not far off where you will start seeing the effects of postponing interest rate cuts start feeding into the world financial markets, taking them down with it. Happy investing. Take care. Bye-bye.